Bitcoin is heating up and we need to take a look at the technicals that are taking place. We're also going to talk about what this could mean for XRP. We'll take a look at the technicals on both of those. I also want to talk about the 20-year Treasury yield and TLT, what it could mean for TMF, because I think it's starting to become a super interesting time for every one of those. I'll also give a brief touch on the S&P, the NASDAQ 100, and the Russell 2000 just to keep up with the updates there and give some other commentary along the way. By the way, if you guys want to see my technicals, see my buys and sells, see the other commentary that I put out over at the Discord, made a panel in the expert panel over at our Discord. We have a joint Discord right now, thousands of members over there, highly positive community, tons of products and services, including the bread bot, which can tell you about oncoming major swings up or down, and then you could plan your trades accordingly from it. There's also the technical analysis tools, the advanced charting tools that we have over there, and also AI features as well, all waiting for you over at the Discord. Links in the description. Sign up for the earner tiers. You get access to absolutely everything that the Discord has to offer. In the meantime, let's get over into the charts. I'll tell you more later. So Bitcoin, check this thing out. Here's the descending wedge pattern that we have on Bitcoin. We've been down below support a couple times, haven't been quite able to stay down below that support. Instead, where we're at right now, we're up against resistance. But what you can see up in here, this large black area, this gap that you have in between, right now we're at 82,000. We have room up to about 89.6. So that a considerable amount, like 8 to 9% up from where it's at right now before we start to run into trouble. Although I will say that we do have, I'll take down the technicals for a moment, we do have this tangle of moving averages. And as I said in my previous videos, getting on top of that 20-day is the first big step that we want to see. We have two volume supported candles. So on the 7th of April, on the 9th of April, showing that, and on two important days, by the way, where we see a lot of buying pressure come in right around 75,000-ish or so. That sort of buying pressure crossing above the 20 could be a good sign early on, despite the fact that we had a death cross a few days ago, which tends to lag behind what we see for the major sell-offs. Usually we see the bottom by the time, or at least some sort of bottom by the time the death cross signal comes around. So we want to see a cross up above the moving averages, this blue 20 first, and then really getting up above the 50 and then the 200. So even though Bitcoin has a bit of a struggle up to 87 or 89,000, I will say that it isn't any sort of Fibonacci value that's sort of in our way, at least not out of the long-term ones that we have, out of the key and critical ones. We have a lot of room in there to rise up to that 89,000. Now, if you also watched some of my other videos, I talked about the rays that we have, and I drew these on here. You won't find them anywhere else, by the way. So lightly, in the background on this thing, there's these little rays that are coming up and across. So right now, we touched on that bottom ray. I said closing down below that could be something that shows a further sell for Bitcoin. Now, mind you, that's always combined with other technical indicators. So you have one ray, a real light gray coming across your screen here, and then you have another light gray line up here that doesn't happen up until this resistance area. By the way, this is fairly massive resistance, as you can see what happened for being fairly massive support. So it stays pretty strong either way, whether it's a strong floor like we had in the past, or now it's a strong ceiling that we have going to the future where we almost were able to touch it in the past time, couldn't get there, couldn't quite get up above it, so it came time to test down where the floor is. So far, we found a temporary floor. We have this trend line to go along with it as well. So for Bitcoin, climb up above those moving averages, and being up above this line here. Let me see if I can bring the ray. I'll try and show it a little bit better for you, so that way it shows up better on your screen. We'll bring up the opacity for you. There's one of them. The next one doesn't happen, by the way, until you get all the way up here. There we go. So we have a fair gap, and it doesn't happen until, like I said, 89.6. If the moving averages kindly move aside for us and let us do step over them, if you will, and get back into bullish territory for Bitcoin, we could potentially see it sometime soon. The volume support is good. We need to break up above the descending wedge, which can be a bullish reversal. So getting up above this trend line, retesting support, and then hopefully blast off from there. We got to watch the moving averages along the way. They're not small moving averages. So moving over into XRP, what do we got for XRP? Let me move some of these other technicals out of the way so we can talk about just the ones that I have here on the screen in front of you. We actually stayed up above the 200-day. We were in something that looks a little bit like a bear channel at the moment. Bitcoin breaking back up above the 20, 50, and 200 could certainly bring some levity back to the XRP prices. Staying above the 200, bullish for us. Getting back up above the 20 and 50 is what's next. That 50 coincides pretty much with this top trend line. We absolutely want to watch for that. It's all about the moving averages at this point in time. We're not currently seeing the volume conviction for these moves yet. across for the RSI up above 50 would certainly be helpful, and it would definitely be helpful if we also had some volume support for that as well. So let me move this up so you can see where our RSI is right now. We do have some evidence that it's climbing on the daily chart, but not quite above 50 yet, not ready to hit that bullish moment. So by moving averages, by the 200-day, we're in really good shape. As per the RSI that we see, well, still a little bit weak at this, a little bit early to see what could happen. ETF news would absolutely be welcome here to see a further rise up. If we go over to TLT, this is the monthly chart that we're looking at, and I brought it here because for TLT, let me stretch out the volume, and then we're also going to stretch out, there we go, the RSI. I've talked before about this rising RSI, and you have falling prices. A bit of bullish divergence happening there with some, we'll say, local drama, if you will, in the bond market, as one of the things that we have potentially is China dumping U.S. Treasuries in order to spike the yields, in order to try and pull a lever to help with the whole tariff situation, so that the Trump administration gives a little bit on their tariffs that they're doing, and then China, of course, if that lever were successful, that would get them back down. But I think that that peeing contest between the world leaders is going to go on for a little while longer, and we'll see when it does finally happen, when there is a deal made, especially if it's a favorable deal made where there's no real escalation or anything like that. There's no retaliation, especially geopolitical or some sort of violent retaliation, which nobody wants that to happen. If it just kind of ends quietly and then all of a sudden, hey, we came to a deal, here it is, that's going to be that next pop, that next big movement, not only for markets, but you're also going to have, like the stock market, but also the bond market's going to react favorably to that as well. If I put the technicals up on here, there's a bit of a mess, but what I want you to pay attention to on this is this trend line that I have across the bottom of these, because we are down near historic lows with what we had going back to October of 23, and we're near support right now, a support trend line. So it is possible that that support holds out for us. We're going to have to watch and see. And then we also have this top trend line here. So you can draw a couple different trend lines. One of the things that we're looking at is a bit of a consolidation pattern. So we got to watch which way we break out of it. We break out the top, that's a bullish. Break out the bottom, that's bearish. If we go down to the daily chart on this, there we go. We can see the inverse head and shoulders that I have on here, which so far got rejected. Sort of fell apart on us because this shoulder fell through, if you will. So we almost had it, and the neckline was actually drawn right along here, but I actually should get rid of that label. There we go. Now it's gone. Inverse head and shoulders fell apart on us, but we are down near those support levels. We're getting a little bit of a bounce in the pre-market. Don't be surprised if we get more of a bounce up from here. The 20-year Treasury yield, this is the thing to watch, because this is going to move inverse to what we have for TLT's prices. You can see the head and shoulders pattern, that as soon as the long-term Treasury started getting dumped, instead of following this and falling down yield-wise, instead it ripped back up. And then, well, like I said, that's one of those pressure situations, probably very highly connected to the tariff situation between the U.S. and China, is what's being speculated, that pushes these yields up so high, which pushes TLT down so low. So if a deal can be made sometime in the near future, this is probably going to be rip. This is probably going to rip as that comes back into play. Now, mind you, if we also see a de-risking in the markets, that could in the stock market, that could also help to see a bit of a bullish movement in the markets for what we have for bonds. So 20-year Treasury is certainly part of that, TMF being the triple leverage version of that, and we are down near those lows. We had a nice old green candle on some significant volume on the 9th, and then, well, subdued volume compared to the previous day as we kind of tumbled back down, retraced quite a bit as that yield continued to spike. So I'll tell you what, it's not a simple time, if you will, for the bond market, but I will say that when the dust settles for it, I think that we're going to start seeing some outperformance, especially if we do start to see some economic weakness continue. We start to see confirmatory evidence. Mind you, we have Michigan consumer sentiment at 10 a.m. today. I think that's going to be a pretty massive catalyst for us. We have PPI at 8:30. I'm recording this before the PPI, before Michigan consumer sentiment. You might see it afterwards. By the way, I give updates, I give technicals, I say about my trades over at the Discord. So do the other panel experts over there. And like I said, you guys can join us by using the link down in the description for the Discord. Click on that, sign up for the earner tier. You get access to absolutely everything that the Discord has to offer. And when you scroll through the products and services that are available to you, there's just an astounding amount that costs you a little bit over $1 a day to get access to. And you also have a a very, very super positive and supportive community of thousands of members all working towards financial freedom with a panel of experts, not just an individual, sharing their thoughts, their perspectives that can help us reach that financial freedom and then can also help with that alpha in our portfolios for the outperformance. So guys, if you want to learn technical analysis yourself, if you want to learn about trading with technicals using the bread recipe, which is the strategy that I use for trading, and then the also options trading as well, you guys can check out the link in the description for Stockmo Academy. Click on that, sign up, use the code word doctor when you do. That'll give you a massive savings. If you bundle the 2 courses, that's even more savings for you. I really do appreciate, my goodness, let me try that again. I really do appreciate you watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.